After a very sudden and unexpected advent of bear market to crypto, I've done a very useful exercise. I've listed down all of the different investments that I've made into different tokens, coins, and projects. After analyzing all of the bad decisions that I've made, I've discovered a very interesting point. 99% of all of the bad decisions that I've made were due not to bad technical analysis or insufficient fundamental analysis, but they were due to bad risk management and psychological mistakes and different biases that I was prone to. So right before we dive into all intricacies and details of investor psychology, welcome to Vesper channel. My name is Arseny, and in this video we will go over 5 biggest psychology mistakes that crypto investors make. Let's get started. I prepared a little presentation so that ideas are much more clear and systematized. So the first mistake is having no risk management strategy, and in fact this is probably the biggest mistake that I've made. When you don't have right strategy, you're much more prone to fall into different emotional traps. You're much more likely to make emotion-driven decisions rather than logic-driven or analytics-driven decisions, and you just become much more vulnerable to different scams that utilize things like FOMO to get money out of you. So the mistake that I've made, and probably one of my biggest blunders, was investing around 30% of my whole deposit into STEPN. This was at the beginning of May. Back then, STEPN was a very promising project. Investors were getting 100% return on their investment within a month. But unfortunately, Luna crash came in and it pulled down with it the whole crypto market with all other coins, and so I ended up in not the best position. And when I was buying sneakers, their price was 14 Solanas, and the price for 1 Solana was around $90, and right now it's like $30. So essentially I've lost 95% of all of the money that I've invested into this project. Now this was because I did not have a clear and risk management strategy. Now let's get actually to what this strategy is. So 50% of all of the deposit of all of the funds that you want to invest in the crypto, you store in stable coins, and you don't just store them on a cold wallet or on a centralized exchange where they lose their value due to inflation, but you use different protocols that bring you some annual returns. I personally use uHodler, and it gives me around 11 to 12% on stable coins a year. Now the other 50% are actually invested into crypto. And the reason why I want to keep 50% of your portfolio in stablecoins is because when market begins to decline, and this happens anyway, this is inevitable, you just begin to buy back those coins, the whole market that is going down, because at some point it's going to recover back and you will make a profit. So you should always have 50% of money in stablecoins, and the other 50%, they are actually invested, and they're invested into crypto. And so I've split this money into 2 categories, and so then those 50% they get split up into strong coins investments and shit coins investments, coins with very high upside potential. So for me, strong coins are Bitcoin and Ethereum. That's it. Although they are quite volatile, they're much stronger than other altcoins. And then other 25%, you can invest in anything you want. You can invest in different move to earn projects. You can invest them into IDOs, different ICOs, anything. And the last but definitely not least part of this strategy is the rule that I've borrowed from Kevin O'Leary. You can invest only 5% of your deposit in any token or project, and maximum 20% in one segment. Let's say you have $1,000 and you want to invest into move to earn industry. This means that you have only $200 that you can invest in move to earn tokens, and you can invest maximum $50 into each move to earn project. $50 in STEPN, $50 in Genopets, $50 in Woken, whatever. So by being disciplined And by following this strategy, you're in a position where you will profit any way the market goes. If the market goes down, your portfolio is really diversified, and by following this strategy, you end up in a much better position. So for example, if you invested in STEPN only 5% of your portfolio and this project turned out not to be profitable, then you just lose 5% of your portfolio and that's it, because your portfolio is very diversified. Or for example, let's say that we come into a situation that is happening right now, the whole market is going down. You use your stable coins to buy back coins that you could not really afford before, like Bitcoin, Ethereum, or other altcoins, because you know that they will go up. So having risk management strategy is crucial, essentially, and without it, it's very difficult to be a wise and, most importantly, profitable investor. Now, the next very big mistake that a lot of investors make and that I've made is FOMO and FOD traps. So FOMO stands for fear of missing out, and this is what happened to me when I invested into STEPN. I believe that everyone went through this. So you see a project and you see that a lot of influencers are mentioning this project, and then you see that this project is going to be listed on a very prominent exchange, like for example KuCoin or Gate.io or Binance. Your analytical part of the brain just turns off, and you just begin to visualize yourself buying a new Lambo. You see that your life is going to completely change if you just buy some bits of this token. And there are a few ways you can get around this feeling. The first thing you can do is just take a deep breath and relax. New opportunities are appearing in crypto almost every single day, and if you miss out this opportunity, probably another is gonna come, so not a big deal. Now the next thing you should do is give yourself a 24-hour restriction for buying this token. The reason why you should do this is that firstly, you're gonna have enough time to make proper research about this project, and secondly, you're gonna cool down and the emotions won't have such a big impact and influence on you, because you need to understand that the less information you have, the more emotional you're gonna be. So just take a deep breath, give yourself some time. I don't know, you can give yourself 5 hours, 6 hours, doesn't really matter. Do research and then make a decision. And the same is with FOD. FOD is fear, uncertainty, and doubt, and this is the opposite of FOMO. This is what is happening right now. The market is going down. The price for Bitcoin plummeted for around 30%, and people are just screaming that you gotta sell. The whole crypto is a Ponzi scheme that is gonna crash eventually. Again, just take a deep breath, wait some time, do some research, and then decide whether you wanna sell it or you wanna continue hodling this coin. Now, the next big mistake is expecting to become a millionaire just overnight. This happened to me. I believe this happened to a lot of guys. When a new person comes into crypto, they might think that this is an industry where anyone can get crazy high returns, like 1,000% return over a period of months. But when you come with this approach, you will probably be investing not in Bitcoin or Ethereum or other coins that can bring 100% return over a year, over half a year, but you will be aiming for those shit coins that can give you these very high returns. And usually 90% of these coins, they fail, and only 10% or even less survive. And so in order to address this psychological issue, instead of aiming for 1000x returns in your first few months of investing in cryptocurrency, look for something more reasonable. Set more smart, more specific, and more achievable goals, like doing 20% return, doing 50% return. I mean, you can go for 2x's, 5x's, maybe 10x's, but not 100x's or 1000x's, especially if you're a novice, you're new to industry, and you don't have enough experience. Now, the next rule, and actually this is not a mistake, this is what you should do, is going against the crowd. This rule is not right all the time, but cryptocurrency in general is zero game strategy, and this means that if someone wins, someone loses. So if someone gains profit, someone loses this profit, and therefore there is only a handful of investors that became millionaires that have earned fortunes in crypto space. They got this money from majority of investors who lost this money. So I really like the quote by Warren Buffett that says, "I will tell you how to become rich. Close the doors, be fearful when others are greedy, and be greedy when others are fearful. Here is very good illustration of how psychology of investors actually form this market cycles. So right on the peak of the market, everyone is experiencing euphoria. Everyone is very greedy, everyone wants to buy more, everyone wants to become a millionaire overnight, everyone is screaming that now Bitcoin is gonna go to 1 million, that we gotta invest now, invest everything you have. And right at that point, those big institutional investors or whales, they usually begin to sell. And so they dump down the price begins to go down, the FUD, fear, uncertainty, and doubt begins to spread. People become anxious, they begin to sell, then they sell even more, and this all goes into a death spiral. And this is exactly what is going on right now in the market. And right when the whole market is at the bottom, new investors come in and they begin to buy, and the price begins to increase, it goes up even more people enjoy, and this is how market cycle looks like. The rule of thumb is sell when everyone is in euphoria, and buy when everyone is in fear. So buy the fear and sell the greed. And by the way, comment down below if you want me to make a detailed video where I would go through all market cycles that have happened in the last 10 years of Bitcoin existence. And the last mistake is beating yourself up for making those mistakes, criticizing yourself. So firstly, there were a lot of studies that have proved that self-love and self-compassion will make you much more productive than self-criticism. And another quote here, Benjamin Franklin said that an investment in knowledge pays the best interest, and the best way to acquire new knowledge is through getting experience, and the only way you can get experience is by making mistakes. Of course, it's much better to gain new knowledge and new experience by making right decisions and by learning from your victories, but from mistakes works fine as well. So the secret here is to change your perspective and to look at mistakes not as events where you've lost money, but just treat them as lessons that you've paid for with the money that you lost. And for example, when I've lost money with Luna, because I did invest in this project, I've just realized that the next time I just need to be more diversified and never break this 5% rule and never put in more than 5% of my portfolio into any of the projects. Okay, finally, if you've enjoyed this video, then please smash the like button and follow the Vesper channel. And also comment down below about me making the video about the psychology of market cycles and much more deeper analysis that you've seen today in the video. And don't forget to check out all of the links to all different social medias that I have, and especially my Telegram channel where I post all new updates in the crypto market. That was it. My name was Arseny. Follow the Vesper channel and see you in the next videos. Bye.